What's up, Infinite Abundance family? Decided to hop on here, do this webinar, make this video, a very highly requested topic, which is how to set up a trading plan. And let me just find a place to put my camera. I have found that when it comes to consistency with trading, it's all about your plan, because it's one thing to have a plan, but it's another thing to actually execute that plan. So I'm going to be going ahead and getting into this. I actually have a 4-step process on how I go about a trading plan. This has been the simplest thing that I've used. It's helped me stay focused, and essentially it's just a framework on how to perceive the markets in itself. So there's 4 steps to this trading plan. I learned this from Luke Longmire. Gonna give him a shout out, Luke Longmire. Shout out to the man. Step number 1, what pair are you trading? What pair are you trading, or what pairs are you trading? That's step number 1. Step number 2, what time are you trading? Step number 3, what is your setup? And step number 4, what is your management plan? I'm going to briefly get into these 4. Now, a lot of beginner traders, they mess up when they're over trading. They're looking at every single pair at the same time. They're so anxious to get into that next trade. And that's what's holding them back. That's what was holding me back for a long time. You know, in my first probably like 8-9 months of trading, I was looking at every pair you could think of. I was just like desperate to take the next trade. Not the mindset you want to be in. Not the mindset you want to be in at all. So I've developed this mindset. I think I learned this from, I can't remember his name, but he said 1 pair to be a millionaire. And the pair I trade is gold. Okay, you should remember that, 1 pair to be a millionaire. If you can master 1 pair, that's all you need. You don't need to look at all the different pairs. You don't need to look at all different charts. Confusion creates stagnation. Overload of information creates paralysis, right? Perfection creates paralysis. This doesn't have to be perfect. The whole idea is this needs to be simple so that you can repeat it. Because what's simple to do is also simple not to do, but what's simple to do can be repeatable. What's complicated is not repeatable over a long period of time. It's not about what you can do in one trade or 1 day and 1 week trading. It's about what you can do month in, month out, quarter in, quarter out, year in, year out. Look at this from a long-term perspective, because if you're trading right now, you shouldn't even start if you don't have the end in mind. What is your goal from the first place? Like, what is your goal with trading? Like, if you don't have a goal, if you don't have a vision, if you don't have something you're focusing on, you will end up where you've always been. You will never change until you make a decision to change. Making a decision is a starting point of all achievement. Desire for that decision to come into fulfillment is what's going to drive you throughout the journey. So what is your goal with trading? Is it you want some part-time income? Is it you want to quit your job? Is it you want to make 6 figures? Maybe you want to make 7 figures. Maybe you want to make 8. I don't know what it is for you, what your number is. Maybe you just want to make an extra $100 a day. Maybe you just want to pay your phone bill or your car note or what. I don't know what it is, but what is your goal with it? You know, I think it helps to have a short-term goal and a long-term goal, an ultimate goal that you want to be at in the next few years, and then a goal that's on the way to that you can go ahead and focus on right now, right away. So this trading plan has created consistency for me. And when I follow this trading plan, it creates consistent results. And when I don't follow it, it creates inconsistent results. So it's just like put 2 and 2 together, man. 2 + 2 = 4, not 5, right? So if you do the right things for long enough consistently, you'll get the desired outcome that you're looking for. Because essentially, if you're thinking about success, you're going to become successful. If you're thinking about failing, you're going to become a failure in this. And I think what holds people back with trading is fear. They're afraid to lose money. Therefore, they're attracting situations for them to lose money because that's what they're focusing on. They're focusing on what they don't want instead of focusing on what they actually do want. So I think it's so important to be clear in what it is you want, not only from trading, but from a life in general. What do you actually want from your life? How can trading help you get there? Because I see that trading isn't something that I'm super passionate about. You know, I love the fact that it can give me freedom and give me money and so on and so forth. But it's nothing more than a tool. It's a resource. It's a vehicle to get from where I am to where I want to be. And that's a good perspective you could have when it comes to trading. So realize it's not something that it's, you know, life or death. It's, you know, I got to rely on this. This is my only shot to be rich. Like, that's not the right mindset. I think a lot of people come into trading with that mindset. They want to get rich overnight. They want to make money in the next day, the next week. It's not about making money initially. It's about learning. Focus on learning the skill and focus on developing the right habits from the beginning, because habits are easy to repeat when you have good ones from the beginning, and it can be much more difficult to change them when you started off, doing the wrong things. When it comes to the 4 bases of success, founding your wish your man Kevin Trudeau talks about the 4 steps of learning, right? You can become unconsciously competent in doing it wrong. And I think a lot of traders have done this. I did this as well. And I've been in the process of relearning actually the right habits, the correct habits in trading. And I think on some level, a lot of traders, I've definitely experienced this in my journey as well, where we lose money that we shouldn't have lost. We take a trade that we shouldn't have taken, and we like to come back at that trade. We like to revenge trade. We like to say, you know what, let me just make this back real quick. And then you end up losing more money than you should have in the beginning. And now you're in this cycle where it's like, damn, I should have just had the long-term approach from the beginning, but now I'm already down this much money. Well, I want to share with you this perspective. The past does not exist unless you think about it. Step into the now, where you're at, what's your current situation. Anything you did in the past, no longer you have to carry weight with that. Let go of it. It doesn't exist. You're here in the now. What is your situation? Where are you going? That's all that matters. Learn from the past, but don't dwell in the past. Don't think about the past. Think about the future. Think about where you're going. Think about where trading is going to take you. And when you're focused on that depth of vision on where you're going and what you're looking to achieve, then it's going to be much more easy and simple to actually follow your trading plan, because you know that professional traders, successful traders that have been trading 5-10 years, the ones that are making the big bucks, multi-millions, the banks and so on and so forth, they have a trading plan. They have a set of rules. They have a method of operation that they do day in, day out. You don't have to trade every single day. But it's like, what type of trader are you? I'll ask you that as well. This is part of your trading plan, right? Are you a scalper? Are you an intraday trader? Or are you a swing trader, right? Which one? Which one are you? Do you like fast money? You like things that you like to be in and out? You like to find out if you won quickly? Maybe you're a scalper. If you don't mind waiting a couple 30 minutes, an hour, a couple hours, or maybe a day, maybe intraday is for you. I'm an intraday trader. Swing trader, maybe you don't mind holding for a few days or a few weeks, right? What it is for you just depends on your mindset and your mentality and what mostly resonates with you. But regardless of which one you are, what your goals are, and what type of trader you are, you need to have a trading plan. And I've set up a very simple trading plan that you can go ahead and follow and hopefully give you some type of consistent results. So I'm going to get down into it right now. Step number 1, what pair are you trading? I recommend selecting 1 to 3 pairs, no more than 3, probably no more than 2. Select one to be your primary focus. Okay, I found this to be the easiest way to do it, especially as a beginner. If you're in your first year of trading, then I definitely recommend focusing on one pair. Do not look outside of that pair. Okay, this will help you stay focused, and it'll help you learn the language of that pair, which will then help you learn that information and kind of take it into another pair. It's kind of like being in a relationship. If you've never been in a relationship with a girl before, you don't know what it's like. But if you've been in a relationship with one girl, now you know different principles of what you like and what you don't like about that girl or like that pair, like that you're trading. And then now you can go apply what you learned to another pair or to another relationship, however you want to look at it. Just a simple analogy. What time are you trading? This is important for those people that are impatient, for those people that are chasing trades, that are looking to enter. They're basically looking to enter a trade at any time of day because they just can't wait to make the next. They just can't miss out on the money. That's called FOMO, fear of missing out. You need to get rid of that emotion. You need to get rid of that entire thing. Not even get rid of the emotion, but don't let yourself react to it, because it's natural human instinct to want to catch things and not want to miss things. But that is something that over a period of time you will eventually remove. Anyway, what time are you trading? For me, it's 7 a.m. to 9 a.m. Mountain Standard Time. That is my trading window. It's important to have a trading window because I'm going to offer you this perspective, right? Okay. If you look at the same pair at the same exact time, looking at the same exact setup, doing the same exact risk management, would you say that that's probably repeatable? And if it's repeatable, that means consistent result. Okay. So with that being said, what is your setup? This could be your strategy, what you're looking for entry. For me, I mark up zones. I set alerts. I wait for it to get into the zone. Candle confirmation, I'm in the trade. Okay, and I'll get into a little bit of that here in this video later on. But for now, we're going over this trading plan. Now, number 4, what is your management plan? This is the more specific rules that you're going to get into. When are you going break even? Ask yourself that. When are you going break even? How long are you holding? Right? What is your stop loss and TP? These are all things you need to know before you enter the trade. Okay. What is your risk management plan? For me, it's max 1% risk per trade. Max 1% risk per trade. Okay. Maybe you have a risk to reward ratio that you want to follow. Okay. Maybe you're doing a minimum 1 to 2 or 1 to 3, whatever it is, risk to reward. Identify these rules, and you really want to take the emotions out. The only way to take emotions out of trading is to make the decisions before you make them. And what I'm saying is all decisions that you make for your trading week are made before the trading hours even start. You know exactly what you're doing before you even begin. And therefore, it's a matter of following your rules, adjusting them when needed. But the whole idea is you want to have the perspective of, I'm trading a series of trades, maybe a series of 20 trades. I got this from Mark Douglas, right? A series of 20 trades. I know I'm going to take the next 20 trades that follow my rules. And after that series of 20 trades, I'm expected to get X result based off of your own back testing. So what I want you to do is back test those rules you just made. And you might need to back test before you even make the rules, okay? Depending on where you're at in your trading journey. If you've never back tested before, get on TradingView, use the back testing tool. That'll definitely help you in becoming consistent and really just gaining confidence. And I think a big part of consistency in trading is confidence, okay? To not care when you lose. I think a lot of us, we care way too much that we lose. We think it means that we did something wrong. It's not true, because you could take the same exact trade, the same exact window, the same exact setup, and it could work 8 out of 10 times or 7 out of 10 times or 9 out of 10 times. But you don't know those numbers unless you actually track it. And remember this, write this down. Whatever you track grows. Whatever you track grows, and whatever you avoid avoids you. Okay? So if you avoid tracking the numbers will avoid you. So if you're not aware of the numbers, then how can you actually make adjustments in your trading plan if you don't know what you're actually getting, right? If you don't know what your result is, how are you going to make a proper adjustment? It's common sense, but common sense isn't always common. A lot of us, we like to take the shortcuts, and that's what I was doing for a long time in my trading. I thought it didn't matter. I thought I could just enter trades whenever I felt like it. It wouldn't really matter. I would end up in profit. But here's the thing that I've learned, that small trades that you think don't matter, they add up over a period of time. And small wins and big wins especially add up over a long period of time, especially when you don't have those random losses that cancel them out. Okay. In my first probably year and a half of my trading journey, I was consistently profitable on paper 90% of the time or 85% of the time. But I had a bunch of random losses that I wasn't counting for in my trading journal. So I had to go deeper into my trading and actually start tracking every little minor detail. And over this last year, I've kept a trading journal on Telegram, where I've journaled every single trade I've taken, every chart I've made. All of that information is there. So now I can look back on it, reflecting on the year, and see, how did I do? How did I perform in this state of mind? When I was getting these thoughts, how did I react? When this setup happened, what happened? When I used this lot size, what happened? And I get all that data. Now I have all this data. Experience, you get data and information from experience. Experience will be your greatest teacher. You can learn from this video, but you're going to learn the best from actually creating your own trading plan and doing your own back testing. That's when you're really going to learn. So this video is just giving you kind of like a basis of where to go with your back testing. And I can get deeper into back testing in another video. I can get deeper into strategy and entries and stuff like that in another video. But like I said, this one is about the trading plan. I think it's important that we realize that don't focus on what you can gain, focus on what you're willing to risk, because what you're going to gain is not always going to be the same. Sometimes you will gain let's say 2% or a 3 or a 5 or a 10, maybe, depending on what your risk is. Like if you're risking 1% every time, that's what you can control. There's 3 things that you can always control in trading, okay? And there's a couple things that you can't control. The things that you can control is what you are risking, where your stop loss is, and where your TP is. That's all you can control. What you cannot control is what happens. Okay, you can also control, matter of fact, I'm going to take it off of 3, but there's a 4th one, is your risk to reward. Okay, if you're doing minimum 1 to 3 risk to reward, do the math. If you are, and I'm just going to go over to a different chart now. Okay, if you're risking, let's just say 1% for 3%, right? Let's say you lost 7 times. Okay, L minus 1% out of 10 trades. Okay, out of 10 trades, you lose 7, you win 3. Right? You were actually profitable with a 1 to 3 risk to reward. 10 trades at 1 to 3 risk to reward. This is how it looks. Okay, minus 1% L minus 1% L, minus 1% L. You see how it's repeatable over and over, okay? And maybe you got a plus 3% win. Maybe you got another plus 3% win, okay? And so on and so forth. You see where I'm getting with this, okay? And do the math. When you add them up over a series of trades, you're in profit. 1, 2, 3, 4, 5, 6, 7, okay? 8. Okay. Now check this out. After you took the first 4 trades, you might be shitting your pants saying, oh shit, I just lost 4 in a row. Oh my God, I just lost 4 in a row. Maybe I need to go rethink my trading plan. Or maybe I need to, reassess what I'm actually doing. Or maybe I should quit. That's what people do. They lose a few in a row and they don't have the grand scheme in mind. They don't have the big picture in mind. So they get too attached to their current circumstance. They get too attached to what's happening to them in this moment rather than over a period of weeks, months, or years. When you look at it from a standpoint of long-term perspective, you're not going to be scared away from a few losses. You're not going to be scared away from a few blown accounts. And, if you've seen the stats on Google or if you looked them up it's like 90 or 95% of traders fail and are not profitable. And that's because a very high percentage of them quit way too soon. They quit after a couple weeks, a couple months, and they don't even get through their first year. So if you've gotten past your first year trading or first 2 years in trading, you're definitely, heading in the right direction. So when it comes down to it, so 10 trades, 1 to 3 risk reward. If you lose 7, that's minus 7%. Okay. If the reward is 3% times 3, that's 9%. So you won 9% and lost 7%. So you're actually in profit 2%, even though you lost 7 out of 10. You can lose 7 out of 10 times. It's kind of like baseball, right? If you get a hit, if you get on base 3 out of 10 times, you're pretty much a Hall of Famer, right? Over your whole career. So if you can win 3 out of 10 trades in Forex with a 1 to 3 risk to reward ratio, you will be consistently profitable over a period of time. Okay. Now keep in mind, this is important to note. The most important part of the trading plan is not making the trading plan, but it's actually following the trading plan, because those are 2 very different things. If you win 3 out of 10, you're in profit. Yeah. If you make the trading plan, that's a very good step. However, if you're not tracking your results, if you're not tracking your trading journal, if you don't know what your numbers are, it's not going to really matter that much, because if you're not tracking it, you're not aware of it. And if you're not aware of the numbers, you're avoiding the numbers. And if you're avoiding the numbers, then the numbers are going to avoid you. It's universal law. Whatever you focus on flows energy in that direction. So if you're focusing on your results and you're focusing on increasing your results will increase. Okay. But if you're avoiding them, you will have none, right? It really does make sense when you put it like that. Okay. So that's kind of the perspective I wanted to share on this. I have probably one more thing to go over on this, because we went over the numbers. We went over the trading plan. Now I will get briefly into this trading journal here while we're on this video as well. I'm going to go to Euro USD. So this is just a simple way you can do your trading journal. I recommend going on Telegram or if you prefer a notebook, that's cool. I've also done it on whiteboard as well. Maybe a Google Sheet, whatever works best for you. But the whole idea is do something that you're going to look at and actually be disciplined to actually mark down every single time. Every single time you enter a trade, put it in the books. At the end of the week, review the trades you just take throughout that week, and then put it in the books. What were the weekly results? And put it in an organized way. And maybe it's in your notebook, maybe it's on Telegram, maybe it's in Google Sheets. Put it in an organized way and track the numbers. Because when you track the numbers, you're aware of the numbers. And when you're aware of the numbers, now you can focus on growing the numbers. And if that's what you're focusing on, that's what's going to happen. Okay. So go ahead and track your trades. That's the power of a trading journal. It's the power of a trading journal. And this is a simple way you can do it. You can identify what's the pair. This is how I like to do it, actually. I like to do it like this. Pair, win-loss, how many pips did I catch, what lot size did I have, and what was the profit. Just for example, gold, win, plus 50 pips, 3.0 lot, $1,500. Like, that's just an example, okay? And when you do that, this is what's going to happen. You'll find that maybe your trading plan said to take 50 pips, okay? But what happens if on this trade, I actually closed early and I took 30 pips, right? I closed early and I took 30 pips, and then it went to my take profit. Then you would put here at the end, this is notes. This is the most important part. This is how you're going to grow. You're going to find out when you did not follow your trading plan. You're going to identify that moment and you're going to write it down. And at the end of the week, you're going to review What mistakes did I make? And remember this, losing a trade is not a mistake. Not following your trading plan is the mistake, okay? If you lose 5 times in a row, you did not mess up if you followed your trading plan. If you won 5 times in a row and you did not follow your trading plan, you messed up. Okay. So just change your perspective, shift your perspective on trading. It's not about winning or losing on a trade by trade basis. It's about following your plan, knowing that it's like a casino. Like the odds are in your favor when you just follow your rules over a period of time. But when you rush and try to do something, quickly in one day or one trade, that's when it's going to hurt you. It may not appear, and this is the tricky thing about trading, it may not appear that it affects you when you just take a random, maybe a random $100 loss or a random $50 loss or whatever it is. When in the grand scheme, maybe you made $1,000 profit that week, but you lost 300 that you didn't need to lose. If you do that 10 times, that's $3,000 that you could have had. If you did that 100 times, I mean, just think about it over a course of 6 months or a course of a year. How many times did you lose a random 50 pips in a week that you didn't even notice because you ended up in profit on the week? But those numbers really do add up over a period of time. Okay. Those numbers really do add up at a period of time. So track when you did not follow your plan, track when you did follow your plan, track what happens, what are the results, get all the information you can, and the thing is, like, the more information you have, it's not always better, but information is data, and data is, it's just like a way you can organize data, you can simplify it, but you have to get the data first. You can simplify it to a way that makes sense for you, once you actually get the data, and you're going to get that from your own back testing and from your own experience. Okay, this is what I've done. This worked for me. So let's say, for example, I did a random, I did this. I think this happened quite a few times to me in 2020, where I took a loss that I didn't want to take, or like I entered too early, or something like that. And it would say that entered early, and then maybe what happened was I would re-enter wanting to make that back. And I think a lot of people do this as well. I wanted to make that back, so I entered real quick, and then I lost another 30 pips. All right. And then at that point, label that a revenge trade. And then what happens is later on in the day, the setup I was looking for happens and I didn't catch it. Right. So now instead of catching, plus 100 pips, you're now minus 80 pips. And now you're frustrated with yourself because you just did something you knew you shouldn't have done. And now that's going to hold you back in the future, because now you're going to hesitate on your next trade. This is just human psychology. Right. So it's not like, I didn't catch 100 pips. That's fine. It's like, if you lost 80 and didn't catch 100, that's a 180 pip swing. It's a 180 pip swing. Right. So if you got a standard lot, that's $1,800 swing right there. Just from quick little mistake that you thought was nothing. And maybe the next day you caught 200 pips. You caught a good trade. You caught 200 pips. Perfect. That's awesome. All right. That's good. Where is it? 200 pips. Yeah. Now let's just say let's just say we caught 100. Let's just say 100. Okay. To make it easy on the numbers. All right. So that's plus 3,000. And now over at the end of the week, overall based off of this, random set of variables here, you're in profit plus 3,000. So you think nothing of it. You're like, oh, it was a good week. I caught 100 pips, plus 100 pips on the week. But if you had those 2 trades that you shouldn't have taken, the one where you entered early and then the revenge trade, that's instead of 100 pips, it's not that, you actually could have been plus 280 pips. So it's a huge swing just by making a couple little mistakes, because not only did you lose the money, but you also, if you didn't lose it, you would have won it. And then it's kind of like this whole dynamic where you end up making, you're a lot of times you will end up with less in your account than what you would have on paper if you would have just followed your rules from the beginning. And that's the point. That's the importance of the trading plan. And it takes the pressure off you as well. That's another thing about the trading plan, is it takes pressure off you to perform, because if you're hyper focused on the present trade you're taking and you're so attached to that one winning, and if you don't win, you're going to think you did something wrong. And that's just not true. You didn't do something wrong. It just might've been one of the times it was going to lose out of the set of variables of 20 trades. So trading plan is very powerful when you look at it from this perspective. I got most of this psychology from Mark Douglas, you can find on YouTube, and also a little bit of this trading plan from Luke Longmire, who you can find on Go Live, the Gold Cup app. But this is how I set up my trading plan. This is my perspective when it comes to trading plan and trading journal. Hopefully this helps you. If you want some help, you want some extra mentorship, send me a message on Instagram at infiniteabundance777. You can join my Telegram as well. I'm just going to put it right here. t.me/infiniteabundance is my Telegram. I do drop some webinars in there. I do drop some trade ideas in there, drop some videos in there as well. So if you're looking for that, go ahead and send me a message on Instagram. Or I hope you guys enjoy. I hope you guys use this and get some results from this. And remember, guys, one last thing, just be patient. Be patient with trading, man. It's not about what you can do overnight in this day, in this week, in this month. It's about what you can do consistently over a long period of time. So that being said, y'all, much love.